What's up, world? It's your boy Ross Mack of Macconomics, and yeah, let's talk about it. Sometimes buying and selling stocks or other securities at the market price isn't the best strategy for investors. Luckily, investors have options. Literally, a stock option is technically a contract between a buyer and a seller that gives the investor the right, but not the obligation, to buy or sell a stock at an agreed upon price by a certain expiration date. There are two types of options: puts and calls. A put gives the buyer of the contract the option to sell a stock at a certain price. When you buy a put option, you're betting that the stock price will fall. Now, a call, which gives the buyer the option to buy a stock at a certain price, is a bet that the stock price will rise. An option contract stipulates the following details. 1, you have expiration date. Now, this is when the option to either buy or sell expires. By buying options, traders are saying they believe the stock will either rise or fall on or before this date. 2, you have the style. There are two different styles of options: American and European. American options can be exercised at any time between the purchase and expiration date. European options, which are less common, can only be exercised on the expiration date. 3, you have the strike price. Now, this is the predetermined price at which the option can be exercised. A trader expects the stock to be above or below the strike price by the expiration date. 4, you have the premium. The premium is the cost of the option that the buyer pays up front, and this is non-refundable, even if the buyer does not exercise the option. Several factors actually determine the premium, including what is called the intrinsic value, time value, and the volatility value. Then you have contracts. Contracts represent the number of options a trader may be looking to buy. One contract is typically equal to 100 shares of the underlying stock. And lastly, you have the underlying asset. This is the security that the contract will be based upon.